And welcome back to Unscripted, everyone. Carwash.com's video interview series that connects you with market leaders. And joining me today on Unscripted, I'm happy to welcome back Dave Haupt, Director of Tax for Red Rock Tax and Consulting. Dave, great to see you made it through tax season, hopefully mostly unscathed. And thanks for doing this video interview with me again today.
Thank you. Yes, I'm grateful to be here, Rick. And I wouldn't say unscathed. You know, every tax season takes its toll. That's for sure.
It always takes a little piece out of you, right?
Yeah, that's right.
So I wanted to get you back on the program today, Dave, to talk about, different payroll dynamics and what business owners, specifically car wash owners and operators, need to know. So no better place to start than maybe some changes or look at anything that might have changed for this year. So what 2022 changes affected payroll tax specifically, Dave?
Well, recently, the thresholds for when you must begin withholding federal income taxes has lowered from $2,500 down to $1,500. But that's already been established for more than a year. So I wouldn't count that as like a big change, thankfully, because there's been so many other changes in the tax code. Payroll has remained somewhat consistent. So in that respect, I would say that's the big change, that even for people who have only stayed with you for a short period of time, who have made wages of greater than $1,500, are going to have a required federal withholding element. And then obviously the state changes are, well, the states, they change way more regularly than the federal does. And then on top of that, you've got kind of an old one back to 2018, that there's no more allowances regarding payroll. So if someone has a W-2 and they say, I don't know why I owe taxes, I have maximum allowances. Well, that's just not something we measure anymore. That's not how it works. Instead, they go off of, they still have a table, but it's not using allowances, right? Because you may remember that the maximum allowances in 2017 was that you could have 9. But now that's out the door. So now you will be putting in on your W-9, which is the information required so that you can receive your W-2, that you're putting in your social security number, your date of birth, your name. Then you're going to put in here, are you single, or are you married, or are you head of household, and how many children do you have? And then after that, they will establish, based off of how much income you will be receiving based on that table, what your withholding rate will be.
Okay, got it. Now, can you provide a payroll tax withholding example for us here today?
Sure. Yeah. So for someone who's not making very much money, maybe we could say they're going to make $24,000 and they're married, then that person doesn't need to have any federal tax withholding, because their standard deduction is going to take care of all the federal taxes. They're not going to have any taxable income after that. Okay. But if you're going to make $100,000 working in the car wash, then you're going to need to have approximately 10% in withholding. So you should expect around 10,000, and you should expect also a small refund on top of that. So that is after you have your standard deduction. You should expect to see something around $10,000.
Okay, certainly understood. Now, I know there are different tax forms based on different employee criteria being met, but can you provide some examples of the different tax forms out there and what some of those employees' requirements are for each one of those forms?
Sure. Yeah, we can just do a kind of a bottom up, that for the majority of maybe car wash attendants, you'll be paying them on a W-2, and that even for hourly and obviously for hourly, they can be paid wages, or not a salary but hourly. And so, at the end of the year, maybe they've worked 900 hours, or maybe they've worked far less than that, but still a W-2 would be the right piece for them. If you've got someone coming in to work on your tunnel, for example, and you're just going to pay them to service some equipment, and the bill comes, or I shouldn't say the bill, if he's going to come and work as a contractor for you, then you could keep him as a contractor, right? Because you're not telling him how to do the job or even when to do the job. He just comes to your place, does the fixes, and gets out of there. So then a 1099 might be a more appropriate way to pay him, right? Because you don't need to pay him on a W-2. So that for someone who's self-employed as a mechanic for those auto pieces. So there are some forms you're going to want to acquaint yourself with as an owner. And that is one, the W-4. Actually, we'll start with the W-9. W-9 is the information you're going to give to every new employee, right? It's a form that is going to ask their name, their social security number, date of birth, and address, a few other pieces of information, so that at the end of the year, you are able to issue them and the IRS a matching W-2. Okay, then there's something called the W-4, and that W-4 is going to be used as a compilation of all of the W-2s. So that is telling the IRS, we sent out 10 W-2s, and of those W-2s, the total value is, I don't know, $100,000 we paid out. So there you go. So the government should expect to see W-2s from all of the employees, and it should match this value. And then the W-2 is the thing that many people are going to receive, that is declaring that this is my employer, this is how much they paid me, this is my federal withholding, this is my Medicare withholding, and all that, as well as any additional benefits like a 125 plan, cafeteria plan, HSA contributions, things like that. So all of that will be disclosed on a case-by-case basis per employee on the W-2. Then after that, you have the 1099, which is going to be for contractors, right? For not someone who regularly works for you. Instead, it would be for somebody who, a self-employed outfit, so that they come in, do the work, and then get out. Not someone who you're planning on having maybe a regular interval with.
Okay.
Oh, and you know what? I've left out something else. Each quarter, depending on how much you're paying in payroll, you would have a 940 requirement. And then at the end of the year, you're going to have the 941, which will be also a compendium of all of the different payroll taxes that you've paid during the year.
Okay.
And that's on the corporate level.
All right, so a lot of case by case, different forms being used. Obviously, some car washes have different state requirements that they need to be mindful of. So a lot going on, Dave. Are there any leading software or resources available to car washes and their HR departments to properly stay on top of all this and manage payroll taxes?
Yeah, there are. And I've got two. One that you've definitely heard of is ADP. ADP is one of the biggest payroll companies out there, and they do a good job. There's a lot of tools, and you can, as the business owner, decide which tools you want to use and how much you are willing and able to pay for all of the tools that they have. Then there's more of an all-in-one solution, which is something called Gusto or Gusto, Gusto.com. And I have found them to be very helpful. Their customer service is way better than ADP's, and in most cases, they cost less than ADP. I have really enjoyed working with Gusto, and again, I will give them a shout out for their customer service. They've done a great job for us and my clients on a regular basis. It can be an accountant-facing platform. It can be a customer facing platform, and certainly an employee facing platform. So everyone gets what they need, and it's customized to that. And then I'll say I probably discourage a ton of use of QuickBooks Payroll. I haven't been super happy with them. It's been a little expensive. It's been a little difficult to integrate, and you'd be very surprised to hear that in some cases, QuickBooks Payroll doesn't end up matching what QuickBooks Online is doing for you. So it seems like it should integrate perfectly, but it's actually been quite a bit of a headache. So I know that I still have clients that use QuickBooks on Payroll, but like I said, it is a bit of a pain.
All right, understood. And yeah, those are just a couple of examples. Obviously, there are many more out there, right? So, so do your research out there, viewers. In terms of ownership payroll, Dave, and the elements held between sole proprietors and S corps and partnerships and corporations, what do you feel is reasonable compensation?
Man, that's a loaded question, Rick. You know, there's a lot to it. Okay, if we start with an S corp, no, let's start with a sole proprietorship. Reasonable compensation doesn't come into the conversation. If you are a sole proprietor, you can pay yourself wages, absolutely, but it's not required. One thing that you need to remember, though, is that if you do not pay yourself wages, then certainly all of the profit will be taxed, and all of the profit will be taxed not only at your ordinary income tax rate, but also an additional 15.3%, which is the self-employment tax. So that's something important to keep in mind, because it is a nasty surprise if you start your business as a sole proprietor and then at the end of the year you're going to get a big tax bill. So that's no fun.
Right.
Now, reasonable compensation for S corps also is a bit of a sliding scale, because you have times when the owner is not super present, not really doing much, and so they're not paying themselves very much. You know, we're talking 1 and 2% in wages, because, you know, obviously the S corp owner is required to pay themselves wages. That's one of the tenets of the S corp. And when I say 1 or 2%, I'm talking gross. So that can, in many cases, end up being 10% of net, 8% of net, something like that. But it depends on what the what the owner is contributing. Because if the S corp owner is acting as the chief cook and bottle washer, then you've got probably a higher threshold to satisfy. And that's also case by case basis, because I want to look at the gross and I want to look at the net. So for any of your car wash owners that have a lot of questions on that, yeah, they should talk to their tax professional and make sure that they are satisfying the rules associated with maintaining an S corp. Then over to partnerships. The partnership doesn't have the same requirements as an S corp does in paying their owners. So you would have dividend elements to consider, and you also have potentially the self-employment tax element to consider. So I, in some cases, would discourage, or in most cases, discourage the use of a partnership for the correct entity for a car wash. Instead, I would rather recommend S corp, or if we have a great deal of net profit surpassing 500,000 in net profit, then I would start considering. It's not a sure thing, but start considering what C corp would look like, because the 21% corporate tax rate does have some efficiencies that an S corp wouldn't. So that's case by case basis, and I would say, well, let's see. Does that check all the boxes for that question?
I think you touched briefly on just corporations a little bit. Did you want to go into any more about the corporations? You went through the sole proprietors and the S corps and the partnerships. Did you want to say anything else about the corporations?
Well, corporations don't need to pay their corporate officers the same way either. They can be compensated in a different manner. And you need to remember that those corporations would be subject to double taxation. Now, not always is that double taxation actually going to hurt you. In some cases, it can benefit you. And that's why I say you're definitely going to want to talk to your tax professional about that. It's certainly a case-by-case basis. There's no hard, fast rule regarding that, other than if you pull the money out of the corporation, it's definitely going to be subject to double taxation, once at the corporate level and then again on the ordinary or on the personal income tax level.
So you definitely want to get with a tax consultant before you take any action to save money in the long term, right? So
yeah, entity structure is super important for businesses. Absolutely. I would say that you need to look at your short-term and long-term plan and recognize you can't just change your entity structure over year after year after year. Typically, the IRS allows it once every 5 years. So that's something to consider as well.
gotcha. All right, so probably this next question also best responded with case-by-case basis, but is there a rule of thumb on how frequently the owner should be paid?
Okay. If the owner only pays themselves once a year, the IRS, in any cases that I've seen that have been examined, the IRS doesn't like that. They don't want to see the business being used as a personal piggy bank. They want to see regular wages going out. But I've never seen them give you a complaint when the owner is being paid quarterly. So it's not that it has to be super frequently, especially, I mean, if you're pinching pennies, if things are really tight, then paying yourself more frequently has its own inherent costs, right? You've got a payroll department, or you've got something that you're paying for to get those forms out.
Yeah.
They cost money.
Now, what about distributions? Is that not the same case, or how would you handle distributions?
Yeah, distributions is that is a super important element of being the business owner. In the case of a partnership, in the case of a C corp, or in the case of an S corp. In a sole proprietor situation, there's no such thing as distributions. So we'll start with S corps because that's where it's most common. In most cases, you're not going to want to see your dividends, or I mean to say distributions, exceed 60% of what your wages have been paid through the year, because that's when the IRS starts thinking that you're using the business as a piggy bank in order to mitigate taxes, which that's not the language the IRS wants us to use. Okay. So when we're talking about distributions, we need to remember what your goal is as the owner. Okay. If your goal is to set this business up to sell in the next year or something, then I wouldn't be super gung-ho on taking a lot of distributions. Okay. We want to show on the balance sheet that this business is able to pay you a living wage, or the wage that you want to be paid, as well as compensate you with tax-free dividends. Okay. Because remember that all of the profit to the business is taxed as an S corp on the owner's 1040 at their ordinary income tax rate. And so when you pay yourself dividends, that's you taking income that has been taxed as profit to the business and paying it to yourself. So it has been taxed. Okay. So a lot of people think of those as tax-free, but it's not really tax-free. It's just the profit from the business and you are paying taxes on it. So then you're able to take that money out. Then you have dividends that are coming from your partnership. And the elements that I mentioned a moment ago about the balance sheet still ring true. Okay, there are limitations, and you don't want something called distributions in excess of basis. So if you have run out of basis in your business and you write yourself a check from the business for an additional $10,000, then what you have is that distributions in excess of basis, and those are going to be taxed at long-term capital gains tax rates. So you should consider that as well. So if you absolutely must have the money and there's money in the business, but your basis is nothing, then it is available to you and you can get it. It just has to be taxed first. So that's something else to consider. So let's see, the last one was corporations. Remember that corporations do not receive any kind of deduction for having paid out distributions to their owners. That I've seen done wrong multiple times. They've had expectations of one thing and received something totally different. So I would encourage you to not think that it's a one size fits all, and that it totally depends on what you are trying to accomplish with your business, what your short-term gains, short-term goals are versus long-term, and what you're really trying to accomplish. So.
Sounds like it's another case by case basis. Certainly no shortage of operators.
It really stinks because when you look at the IRS tax law, it seems so black and white. But then when you actually applying it to someone's real life, it's all this enormous gray scale.
Right. So Dave, for this, certainly appreciate you taking a few minutes here to go over some of these dynamics going on with payroll in 2022, but or payroll taxes in 2022. But just wanted to one final question for you, if I could just ask you to look in that crystal ball and look ahead for us. Do you expect any tax changes in terms of specifically on payroll taxes coming for 2023?
That's a great question. If major recession points start pinging, there may be some reduction in federal withholding requirements. And if I know that it's unlikely for the government to recognize the recession, we will all have lived it for 6 months before the government can officially recognize it, because that's how economists measure those kind of things in fiscal quarters. So it depends on what the Fed is willing to do, and that will trigger Congress to change rules. So you may see a reduction in federal withholding limits, and you may see some softening of additional rates. But I wouldn't say that I have not heard a lot of chatter regarding big changes. And if there are big changes that you have concerns about, or any of the owners that are in the audience are concerned about, then I recommend them talk to their payroll professional.
Yeah, it's always important to stay on top of these changes before it's too late. So appreciate you going through some of these dynamics with us today, Dave, and keeping our audience on the right side of the IRS. I know my tax guy tells me I'll earn more than I pay in taxes every year, so I think he's just trying to soften the blow when we're done with the whole process. But I appreciate your help today, Dave, going through some of these questions, and look forward to seeing you at the next trade show for the car wash industry.
You got it, Rick. Thanks.